September to October bills and short-term special bills are drawing in more investors' interest in the T-bills market. Now, for the bond space, the bears hold on to the market and are yet to lose in their grip despite the 75 billion naira coupon payment, which was witnessed on Thursday. Meanwhile, market players are eyeing the CBN's bi-weekly retail SMIS auction today. Buki Aregbesola, head of Treasury coverage at Axis Bank, joins me now for more market updates. Thank you so much for joining us on the show today, Buki.
Good afternoon.
Now let's break down the playout of activities we've seen from Monday up until today. Now, today's marking one of the last few days of the month of October before we say goodbye and welcome November. Let's look at the playout of activities and investors' interest right now.
So this week we've seen OMO credits of 30 billion. We also had an NCB session on Wednesday where there was a net credit of 130 billion because the DMO could not raise the total amount on offer. And we've also seen a series of coupon payments coming into the market this week. And what that has done to the money market is that opening the week where we had a repo position of about 146 billion, which means banks were borrowing from the different discount windows. We've seen an improvement in that position to about 10 billion net debits opening yesterday. So what this has done is also to reduce the money market rates from 16.3 and 16.5 on the OPR and overnight to 14.83 and 15.3 as a close of business yesterday. However, we expect that with the retail auction of today, there would most likely be an increase in this rate. However, the money market has not started trading today.
And I'm looking at the playout of activities, the 2032 and 2037 papers also have an investor's interest as we speak. Let's talk a little more about the bond markets now.
So this week we've seen particular interest in the 2032 and 2037 papers, and this is because these are the on-the-run auction bonds which are on the calendar for this quarter. So we've seen interest in these papers, some buying, some selling. So at the moment we see 2037s trading around about 16%, which was where the last auction had closed, and 2032 is currently being offered at 15%. However, opening markets today, activities has been very quiet, so we do not see a lot happening before the end of the day.
And do you still think that this affects illiquidity is going to continue? And how do you also see investors moving now? Would you still see sitting on the sidelines continue for a longer than expected period?
Definitely, the FX illiquidity has persisted for quite a long time, and also given where the parallel market is trading at the moment, we expect that the widening between the official rates and the parallel market rates will continue to make it difficult for foreign portfolio investors to come back into the market, except there's a closing of the gap between these markets. So we don't anticipate that we'll see those flows coming in the nearest future.
What's your expectation for next week?
For next week, it's going to be the beginning of a new month, so we do not expect to see a lot of activities. Our expectation is that clients and banks will be positioning themselves for what will happen at the next bond auction and possibly NCB auction. We saw an increase in the rate on the NCB, particularly the 1 year to 14.5, and because the subscription was really poor, we expect that this will continue to have an impact on rates, and rates will continue to go up, both on the NCB and bond auction side. But our expectation or our hope is that DMO would also engage CBN to see if the current restrictions that they placed on banks accessing the window on auction days, if there could be any change in that. We expect that that would also help to improve subscriptions at auctions.